Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday morning edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Hope everyone had a nice, relaxing weekend, but we are getting started with the market this morning. Some earnings coming today after the bell. We've got Netflix later today is kind of the big one of the day, but sort of a big week across earnings land, so we'll talk about that. We'll talk about the news from Friday night that Tesla laid off like between 400 and 700 employees from their main plant there in California. We'll talk about what was happening Friday in the market. We got a lot of ratings today to discuss as well. And then at 8:35, we are joined by Andrew Zatlin. He's the editor of Moneyball Economics. Joel, what's doing in the market?
We're green. We're green by 1.5. Made a new all-time high overnight. Former all-time high, 55.5. We reached 56.5. So there'd be a target on the upside. On the downside, we got a little bit below the close, not much. Your close was 52.75. That's shifts off the all-time closing high at 53. So no continued downside until we take out that pre-market low of 25.52. Nice move in the crude oil futures are trading up 85 cents at 52.30. One number and one number only here on the upside. 52.86. That was your high in September 28th, and that was the recent high of the move. Another target on the upside. And good old gold trading now above 1,300, up 320 at 1307.80. That's up 320. Let's see if we can find some resistance. Oh, we got a ways to go, but 1, 2, 3, 4, 5, 6, 7-day rally in the gold market. Silver up 5 cents at 17.46. Good morning, Dennis. How you doing here at 8:04 on this, I'd say, breezy fall Monday morning in the Motor City?
It is breezy out there, and it is cooler out there. So fall is coming, and obviously not doing that great because sports, I'm just done with sports. How do they say get your kid hooked on sports at a young age, and then, it's fun to play the sports, but the real hardcore fans, man, we suffer, especially, in the Motor City talk, Lions now looking rougher here. Obviously, well, the Wings are doing okay, but I don't know how long that's going to last. But we know I'm an Oilers fan, and in the hockey, Oilers were supposed to be better this year, and they started 1-3 here. We know your Blue is struggling too, Joel. I mean, it's so depressing to be a sports fan, and if you really analyze, and we've done this before on the show, in the professional leagues, like not talking college sports, but in the professional leagues, there's over 30 teams and like a 3% chance of being happy at the end of the year because only one team's going to win. So the other 97% of the fans go home mad. So I don't know. It's frustrating to be. I wish I wasn't such a hardcore fan of my sports because it ruins your weekend.
I thought you were going to tell me that David McConnor got hurt.
David McConnor. No, but you feel for the Packers fans, though. I tell you, with Rodgers going, here's a team that's and that changes everything. And I'm not a Packers fan, but I feel for them. I know how that is because McConnor, he's talking Connor McDavid and I 2 years ago, he got hurt and your season's done. I mean, when you lose your best player in most sports, you're in big trouble. So I don't know. Sports is just another thing to talk about. And maybe, I know you do the stocks and jocks. And do they ever talk about, the sadness that comes with watching sports?
Well, yeah, we do.
The psychology, it affects you. It affects my trading even. I'm all sad over my team. It's ridiculous, really, when you think about it. Why do you get so attached to a team? Why does that happen? I don't understand it, but I am.
Well, for me, it's a generational thing, but not everyone has that. But Fuzzy's mentioning the injuries in the NFL, and that's kind of what's turned me off to it. I mean, devastating injuries. But you know what? All you need to do is, if you have a bad sports weekend, you just need to wake up at 4 a.m., right? The stocks open at 4 and just buy, right, Dennis? And then, you make a little.
And then you're always happy because the market goes up no matter what.
My sports team's horrible, but I made money. In the market, and that's where we're at right now. S&P is trading at 25.54, up $1.25. Once again, even Barron's headlines talking about the flash crash and how it's going to, or the stock market crash from 1987, how it's going to be computer driven. And no.
So they're predicting a new one?
They just, the whole thing is that, the different circumstances, what they're saying now is that it's going to be computers. They're going to do it. Something's going to get started, but that's kind of like old news, isn't it?
Well, we already saw this twice happen.
I know.
Yeah, that's old news. May 6, 2010, the flash crash happened, the original one. And then we had the one in August, I think. I'm losing track of years in my old age here, but
15.
In August, I believe 2015 it was, when you had the second flash crash. So that's old news. We know that happens. The computers all shut down and we have no liquidity, and then the market crashes. But they got circuit breakers in there now, Joel, though. So it's not going to be as bad as it was on May 6, 2010, when you had Accenture trading at 1 cent a share. So we won't see that again. But that is old news. And the market structure is a whole other thing. I think it's maybe too early in the morning on a Monday morning to go into a big market structure talk here. But 30th anniversary of the crash, though, Joel, that's, you were there. You were there. What was it like?
Well, I mean, I told you, we mentioned this in the pre-market show. I did have a seat at the Merc, but unless you had 100 GER in your account, which back then was what?
You're a young buck then.
Yeah. I'm like, I was probably only 75,000 short of that. They pulled you off the floor and they wouldn't let you trade unless you had 100 grand in the account. But
was that like during the crash as it was happening, they pulled you off the floor, or did they anticipate that it was starting to crash?
The day before. There was a lot of.
Well, how did they know that it was going to crash the day before, though? Or how are they just getting too volatile? Like, what was the? Okay, so I wasn't there. In '87, I was 11 years old. I was in school. What was happening the day before that made them nervous?
There was a lot of volatility on that Friday. I can't exactly remember what happened, but I mean, there was things going on with German interest rates. Crude was all over the place, and the exchanges can change the margins anytime that they want. I mean, that in the clearinghouses too. So I don't know. There were things going on. I mean, it certainly wasn't like this Friday, where the markets were just climbing higher. There was increased volatility. And I remember going to get my jacket, and they, the clearinghouse, I was 287, and they said they just pulled it. They just wouldn't give me my jacket to go on the floor. So, I mean, wow. They could do that arbitrarily. I mean, because ultimately they're on the hook, for money that's lost beyond what's in your account. But that's on Thursday's the anniversary, right? I think maybe I'll try there's a few guests that we've had on the show that may have been on the floor in 87. And that'd be good. After the show's over today, maybe I'll look at our pre-market guest list and see if we can find some people that actually traded and on the floor during that. I got a good story I can tell on Thursday that.
Okay, we'll save the crash talk for Thursday then. Maybe we'll do a crash show on Thursday or something, because we know we're the farthest away, it seems like, from that in this market, because we just keep going higher. But let's talk individual stocks here. So we've had a lot of ratings. We're going to get to those in a second because there's a lot of interesting ones. So we might do those earlier today. But tonight we're going to get Netflix. And NFLX has been on a monster run here as of late. So you can say this has had your classic run up into the report. It's even up $2.50 more here today. I mean, there's a trade here, just buying this thing ahead of the report, because it seems to always run up ahead of the report. You can see even back in July, you ran up for 1, 2, 3, 4, 5, 6, 7 days. And we gapped up on the earnings and actually continued to run up. There's a play here buying these things a week or two before they report, even the day before they report. I mean, if we were bought this Friday, you already can cash out for, $2.31 here this morning. So just because it's going to report tonight.
200.82. That was your all-time high. Actually, Young Spencer had a good question on, I think it was Friday. Was it Thursday or Friday? He was talking about the $200 level. And this is the trading. I think it was from Friday. And it got above 200, right? And all the momentum, all the breakout. Oh, we're over 200 now. We're going to 205, 210, and we only got up to 200.82. And he was saying, looking for a reason or whatever. And I just said, in a stock, this was my explanation, Dennis. Maybe you have something better. Is that, let's say you own $500,000 Netflix, right? and you want
you're a player. You're an institution.
And you're an institution. I mean, institutions probably have that much, right? Maybe.
Yeah. There's some. There's big guns that'll have that much.
So let's say you want to get out of 250,000 at average price at 200, right? You're not going to put 250,000 at 200 offer, right? You will absolutely.
Yeah, the odd person does, and we see those orders, and we see how that stops the stock from going up.
So
the smarter institutions aren't doing that.
So instead, it gets up to 20050, and you give an order and you say, sell me 100,000 down to 200, and unless there's someone willing to step up the plate, you couldn't even. I don't even know. I didn't look at the volume on that bar, but. Could you have gotten 100,000 shares off it above 200, even when it was trading at 200?
A lot of stock on Netflix.
Yeah,
I'm not sure.
Yeah.
That's a lot of stock. 100,000 because you're a $200 stock. 10,000. I'd say yes. 100,000. That would move the price, man. And when you've got that kind of size, that's why it takes them sometimes days to work out of positions. The big institutions, they can't just go like a retail trader and say, "Oh, I'm going to sell here and be out." I mean, they got to work those orders. That's why they're using algorithms. They're doing them different ways. You're working 500,000 shares of Netflix. You will impact the price. So, you kind of got to sell while it's going up.
Yeah.
Because if you try to sell while it's going down, good luck.
Yeah. I mean, and if you put a big order out there, they'll just feast on it, right? The algos will get there and do it. So that's just a little market.
And they don't do that. Jimmy A is, making a good point in the chat. They all use VWAP now. They just volume weighted average price, and their algo just slowly drips it out there. Just drip, like you're saying, drip, drip, drip. That's exactly what it does. Just sell a couple hundred, sell a couple hundred, sell a couple hundred. Sometimes it go on for days. Like if they've got, sell 500,000 shares, you're just going to sell 500 shares every few minutes. You go on for a long time. But even those algos eventually will put pressure on. If you put that much steady selling pressure out there, eventually, when the market goes in waves, you have a little down pressure there. You're going to start to put downward pressure on as well. So, there's got to, be. It's always better to, if you're big, and you have some size, to be lightening up as it's going up. Because it's a lot easier to sell as the stock's going up than it is when the stock's going down.
And especially with news, like an earnings event or something like that, you're gonna have a lot of competition. But Netflix after the close, $14 move is expected according to Fuzzy, 7%. Boy, in this low volatility environment, I don't know.
Big move.
It
had a big move last time, though. What was the move last time? Let's just look at the chart. We can see it. 162 went up to over 183. So 20. You had, well over, and it's a $200 stock now. So that percentage, 7%. You're almost a 10% move on the last earnings report. So if it was 7% last time, the straddle buyers would have made money. But I still think, you make more money selling options than you do buying them. And I think those straddle writers in the long run make money.
All right. So we don't have any earnings from Friday
Schwab
this morning.
Schwab this morning. SCHW did report. Spencer, did we get the Schwab report yet?
I haven't seen it. I have not seen
maybe
Schwab numbers.
Maybe my calendar was wrong. I'm pretty sure they're due to report this morning.
I didn't see
Did you see them on the calendar?
No. Oh, no, I didn't actually.
Oh, maybe I'm wrong.
You're wrong.
My calendar was wrong, maybe. So anyways, okay, I had them on my calendar to report if that's SCHW. So maybe not. So it's Monday morning. It's usually not a lot of earnings on the Monday morning. There is individual movers here, though. One stock I want to go to is a small one. It's the big winner of the day if you go to your filter. This popped Friday night, TRXC, Transcenterix. And the headline here, Spencer?
They got FDA clearance for their robotically assisted surgical device for adult patients. Not approval, not FDA approval, FDA clearance, which it's technicality, but there's a difference there.
Okay, so it's on the way to approval, yes. It looks like here. And the stock is getting a huge lift in the pre-market. Closed at $1.46. Trading $2.65. It's already traded 2.6 million shares this morning. It was trading actively Friday night. Friday nights are quiet, but the stock was not quiet Friday night. It was blasting off into orbit. And I had a couple traders saying, what's going on with Intuitive Surgical? ISRG, what's going on? And I was like, well, this is like, right there in their wheelhouse here. So maybe some potential competition for Intuitive Surgical here. And ISRG was actually getting crushed on Friday night. If you look at the chart of that one, that traded down. How low did we get ISRG? I thought I saw a 339 print. Is that right?
339.99. And you did have a bunch of lows in that area. So caught that level real quickly. You had to have been right on the dime at 340 to get it. And Street doesn't, I mean, looking at it now, Street doesn't seem too worried about this. This has bounced nearly $18 off that low, got back to
Coming back.
Yeah, 358. And then in the TRXC, it looks like you should have sold your peanuts when the circus was in town, because 344, and now you got a slow leak going down almost $1 off that. Little support at 260, but 344, your pre-market high, looks safe for now.
So ISRG hasn't bounced back quite a bit from that. And that stock has just been an absolute monster. Like when you put it in perspective, go out to the monthlies. This was a $150 stock in 2015. It's a $360 stock now. Go back to 2011. This is an $82 stock. It's one of your best performers over the last 10 years. Unbelievable stock here. Trading up near highs still, even though we're pulling back this morning on the news of that TRXC potential approval.
What a worthless split they had. What was it, 3 for 1 or something like that?
Did they split the stock? I don't remember.
They did split it recently. Yeah.
It's right back up.
Yeah, look at that. And I think they had a nice run into the split. I think it was only a week or so ago. I think if John Dotson's in the chat, he could tell us. But they have nice run, nice rebound here. Let's just look for that. See where we are in compared to Friday's close. Friday's close way up at 362.29. So if you're looking for another target on the upside, the closing price and then the all-time high was made a little bit over a week ago, and that was at 367.50.
Nice rebound in a couple of laggards there on Friday. Viacom had got like 2 or 3 days in a row where they had downgraded the stock. Well, the buyers came out on Friday and they decided, no, we're going to buy this thing today. Got down on Thursday down to 23.45. Friday, what happened on Friday? Was there an upgrade or something, or did somebody defend it because it opened up $1 and then it never looked back? So VIAB, I'm looking at the chart on that one, but on Friday, see the action, Joel, or did it open up $1? No, actually closed. No, it had rallied on Thursday, so that was it. So it sold off Thursday. I believe it was a downgrade and got all the way back to flat. Then it opened kind of flat on Friday and then ran up another $1.50. So VIAB knew there was a bounce coming sometime, and it had a nice bounce on Friday.
All right, let's just take a. What do you like, Pat? Which one has the more volume? The VIAB?
VIAB, yeah. The VIA is not a lot of volume. VIA has locate issues sometimes. You know, they do track each other. They're supposed to track each other, except for that one time the VIA had the tough locate for a while. But VIAB is the one that has volume.
All right, let's just look at the pre-market action. I think I'll look at the action for Friday. Action. Yeah, no pre-market action. What you want to do in this one is you want to clear this 26.33. That was the high from Friday, and then another one on the gap down day. You had a high at 26.62, I think, before you get out of the woods. So there's a couple levels. Let's split it and make a half number out of it. 26.50, a level to take a look at in Viacom B.
You got to run an overhead supply there eventually too. I know there's a few people probably caught short, so there's a little bit of a squeeze because maybe it was just down too much too fast. But that 28 level looks like the Rock of Gibraltar up there. So many highs in September. So if for whatever reason this thing gets silly and starts to go up another $1.50, I think you run major resistance up for 28. So I'm ready with my selling shoes on up at $28.
Okay. All right, see if it gets there today.
Chipotle was the other one I wanted to mention. It had been holding that 300 forever. For 2 months, we've been trying to hold 300. We finally broke out, and I believe there was some negative commentary on Friday, and they didn't care. They decided to buy Chipotle off the hop, and it kept running and actually ran up about 15 points on Friday. So Chipotle, good day for CMG shareholders.
This 320 area had been resistance. You cleared that. Let's give it another day or two because this is popped above 320 a few times. It's like 300, under 300, up to 320, and then back down. So I'll be keeping an eye on this one, see if it can hold those gains from Friday, stay above 320. Then you might have some shorts, kind of thinking, maybe I missed the low of the move here, but nice consolidation. Holding 320 to me is important for CMG.
Let's jump over here to. Did you have something, Spencer?
No. No.
Let's jump over here to the ratings parade here because there's a whole pile of big ones here this morning. First of all, Apple is getting upgraded at KeyBank up to overweight, putting a price target of $187 on it. And the stock is responding here in the pre-market. It's trading up $1.50 this morning. Apple, thoughts on this one? Joel's back.
Apple 158.50. Man, the level I was keeping an eye on this one was the 50% retracement of the move, which was 157. And you had that one day when Google was taking them over when it had to spike to 158, but it closed right at that 50% retracement there. So I don't know if I'm going to be chasing it up $1.34, only on 126,000 shares. But if it comes back into that 50% retracement area, 157, then I'd be looking at it for a lower risk short. I mean, expectations here. Now that it would go back to the all-time high. I just don't know. You got earnings in a couple weeks. So after that nice, break from 165-ish to 150, people might be lightening up ahead of the report. I see no major resistance until a couple highs at the 160 area. Not sure we're going to see that today.
Bluebird Bio, BLUE, catches an upgrade at Evercore. Analysts have been busy on this. They've been downgrading it, upgrading it, and so kind of creating a whipsaw. I tell you, you look at that chart, man, that's a clear-cut head and shoulders there, Joel, if you ever saw one. Perfect. Look at the September. You can see that left shoulder, the head when the stock blasted off to 143, and then the right shoulder is almost perfect. It might get messed up here today, though, because it did get upgraded. Evercore outperformed. They put a price target of 152. It is trading 133 in the pre-market, which means it's trying to break out from these 132 multiple highs that we've had here. So the pattern might get a little bit messed up here today, but if you're a pattern trader, that does look like a head and shoulders to me.
Yeah, let's see what the pre-market action here is. That's a weird. I mean, if you look at if you throw out the high and throw out the low, like the 143.50 high and 120 low in there, and you just draw some trend lines here, looking to clear. As you clear 132, you look like you're good on the upside. And if you break below 120, let's call it 125. Let's see what the pre-market action is here in Bluebird.
It's up $1.50.
Yeah. I don't know. I don't like that pattern.
No, it looks like a head and shoulders classic bearish pattern, but sometimes these things, when they're that clear cut, go the other way just because people are like trade them technically. And we know market likes to punish the maximum amount of people. When you get the pattern I used to even say it intraday. When the pattern's so perfect, when it's too good to be true, it usually is. And it means there's other traders that are probably recognize it as well, maybe too many short-term traders, and it can actually go the other way. So I'm always cautious when you see a pattern that's so nice. And this looks like a classic head and shoulders. So that actually, may make me bullish here if it starts to take out 133. But I don't know. This is one that's headline driven too. So you got to watch technicals when, you got these biotech stocks that sometimes, it'd be a headline, on a drug or anything like that. And, technicals don't matter at all when you get drug news on a stock.
All right. S&P.
Adobe.
We got news on Adobe.
Adobe. Yeah. I got a pile of ratings here for you. And Spencer, If I miss any, let me know here. Adobe downgraded Barclays here today. BCS. They are downgrading it. It's down $3 here in the pre-market. Pulling back to the 150 area.
150.11. That is your pre-market low. And you have a couple lows at the 150 area. So you did get a little reprieve. You're at 150.75. Very important to hold 149.53. That was your low on October 6th. And got about a $2 drop here into the 147 handle. If that can't hold, when you get a move like this, you want to see if you can fill the gap. Get to the lower end of Friday's range. You got a little ways to go. 153.06. Easier to find the support in Adobe here and try and figure out resistance after this downgrade.
Bristol Myers, BMY downgraded Jefferies. Stock's been on fire, BMY. It's just been slow, steady climber since it made the low in $52 back in July. It's been straight up here. It's going to be down a little bit here this morning, at least with the downgrade. Thoughts on the technicals of BMY?
Nice run up in BMY. I know you were trying to hold on to that one long term here. What I put BAC in here. Let's take a look at Bristol Myers. Not a lot of trading going on. A couple odd lots of trading. Let's look at the daily chart, see what's going on. Big run up. I say we need to get back over that close of 65.29. On the downside, 3-4 lows, 63.75 to 64. So not looking for a lot of downside until you take out that area.
Citi getting downgraded at SocGen. They are downgraded to sell this morning.
Ooh.
We know Citi had the decent earnings report, and they hit it hard. They opened it up that day, and then it hit hard. And actually on Friday continued the sell, got all the way down to $70.91, did rebound at the end of the day, putting a little bit of pressure on it. But you know what? I think I'm fading this. I think SocGen late to the party here now. Stock's down $5, almost $6 here off a decent earnings report. I think you find buyers in the low 70s. So despite their actually being a huge seller in the pre-market, somebody's trying to sell 40,000 shares right now at 71.53. You don't see that very often in the pre-market. I think you're going to find some buyers in the low 70s.
Really? Someone's showing 40K at 71.50?
40K in the pre-market, 71.53. Yeah, they're trying to sell it right now in the pre-market. Somebody's scared.
Wow.
That's big size in the pre-market. See 40,000 shares of any stock. And, Citigroup is, a fairly large stock, but 40,000 shares, that's a big position to work in the pre-market. I'd rather, if I was an institution, I'd be waiting for the regular liquidity on that one at the open, unless they think something's going to happen. They just canceled it. So it was there, but somebody was trying to work. Oh no, there they are. Look, 71.41. They're trying to sell it again. There it's going. It's going right now. I tried to buy it actually, but I'm on a live radio show. I'm not supposed to do trading.
Did they
just
offer?
Got taken out. He just got done. 71.41. He just got done.
He offered the whole 40,000 printed?
Yep. Just went down to 41 and they just lifted it all. A whole bunch of small traders, 1,000. They just lifted the whole thing. 71.41. It's downgraded to sell today.
Oh.
So, I think there's going to be some pressure on the stock, but somebody, obviously want it out right now.
Yeah, I think Mr. Green took 10,000. Spinner took 10,000. Who else is in the chat?
Tell a radio show people.
Yeah,
took it
Johan Smith. Johan
only
only took 5,000 because he was short 10,000. He only wanted to cover half of his position. For this one, the lower 70s. If you continue to go down, you had 3 lows in Citigroup. Right around $70 before it shot up ahead of the report. Those lows are actually between 70.30 and 70.50. So another buck before real good support in Citigroup. We'll see how these guys do getting out of those 71.41 buys.
Valero and PSX both getting downgraded this morning at Jefferies, and VLO is trading down a little bit. I think VLO kind of downgraded the other day too, and they just kind of shrugged it off, came right back. PSX, both these stocks have been absolute monsters too, flying high here. And PSX is trading down just slightly in the pre-market as well. Actually, it's not even trading down; it's offered down 93.80, closed at 94.43. So no trades on PSX. VLO is trading down about, it just takes some stock at 77.79, but it's offered there too. So I think there'll be a little more pressure in that. Oil is up this morning though, so that's always something to consider as well.
I mean, this stock has had a super run here. This Valero vet basically straight up here. So I don't know. I mean, you'll find some buyers here if you do get into the lower 76s. Valero, let's see what your last trade is in Valero. Last trade in Valero is, boom, 77.79. It's only down 29 cents. Tight range on Friday. 2-day low is 77.10. If you get a chance to buy there, I think you'll find some support. All-time high in Valero is 78.64. And you know who this was a favorite? I remember when we had Ron San on. He several years ago. This was his favorite stock. Ron, if you're listening, you're holding on. Congratulations.
Hey, that's a good one. That's been a good one. I had Valero for a while. I bought it back. You know me, I always like to buy on the cheap. I bought it back, I think in 2016, around like $48, which was almost near the low. But then, of course, you know me and Scout, and I get out too soon. So I'm always good at entering. I'm always bad at exiting. Anyway, I sold around I think I got up like $69. It ran for about a year, and I was like, that's good. And it was paying me a dividend over that year as well. So it was a decent trade. But again, it's up here at 78. And I'm like, man, I'd like it to pull back. I'd love to get back into that thing in the low 60s, but not sure it's going to happen. We did get imbalances here. I know somebody was just asking me about the Netflix imbalance. NASDAQ imbalances don't post until 9/28. So that's why you often see some violent moves on the NASDAQ stocks as you get closer to the open there, because those imbalances come out 9/28, and that's new information. The New York Stock Exchange imbalances post at 8:30, and they just posted right now. So they post 1 hour before the open. NASDAQ only gives you 2 minutes before the open. So, and the other thing is, is also obviously the opening projected price post then as well. So I think that's right. I'm getting confused now too with myself. Anyways, so 8:30, we've got the imbalances. Square, that buy and balance is still there every single morning. SQ 50,000 to buy in SQ. Alibaba 108,000 to buy in that one. Ford 94,000 to sell, getting another downgrade here. Everybody's ganging up on Ford. RBC downgrading Ford here this morning. General Motors 24,000 to sell. It had a decent day on Friday. Just trying to look if there's anything else of interest. Citigroup 49,000 to sell. We know they got downgraded already. Snap is 23,000 to buy. Man, Snap had a big run there too, and it's been on a run here. Just looking at the chart on that one. Nice 2-day move for SNAP.
What about Square here? Snap, I'm showing the chart getting close to 17, but Square basically had a down day yesterday because it was unchanged at 32.81.
That's its down day.
Yes.
When Square has an unchanged day, that's like a down day.
So this is the last down day that Square had was, oh my gosh, it was back on September 25th when it went from 28.75 to 27.45. Then every single day it's been green except on October 5th and 6th. It was unchanged at 30.76, but then it continued to power higher. So I'm going to keep an eye on this all-time closing high price of 32.81. Actually, you have nearly identical ranges from Thursday and Friday in Square, 33.16 high, 33.22 high on Friday.
Wow.
The lows were within 20 cents and the closes were exactly even. So
wow.
Pause in
Deja
the
vu.
action. Yeah, pause in the action here. Not an inside day by any means, but just the high was a little bit higher. So Square setting up for its next move, either higher or lower.
Jumping over just to a couple more ratings. CSX getting downgraded at Wells Fargo. Also NSC getting downgraded at Wells Fargo. So a couple rails getting downgraded here too. CSX and NSC, they've kind of just been, well, NSC has been running, I guess. CSX hasn't run quite as far there. But all these stocks, when you really put it in perspective, over the course of the last 2 years have been impressive as well.
All right, let's look at, is that the one that you got plowed in a couple weeks ago or a couple months ago? Was it CSX? There was
that was a couple years ago, but yeah, I did
it wasn't. It wasn't a couple years ago.
Wow. It was on some news event. It was, Joel.
It was in January.
It was a long time ago.
It was in January.
Was it in January?
Yeah. Yep.
Yeah, when maybe the 40 to 45. Yeah, I started shortening after hours, and then it just kept going on me, and I was like, ooh. And sometimes you got to watch after hours. Like people say, well, why don't you get out? Well, sometimes there's nothing there. Like sometimes there's nothing there for a point. So it's not as simple sometimes after hours trading on the illiquid ones. Like you can literally get markets. There's no market after hours. You could sell it. Don't even nothing for 10 points. So, sometimes after hours, you got to really watch the liquidity. If you're trading the active movers like a Netflix or an Apple, there'll always be a market there. But sometimes on the illiquid stocks or after hours, there's not much there.
There was news though. I mean, and
it was.
Did you get?
I was fading it.
You were fading the news.
Yeah. Oh, yeah. I faded the news. I thought, that's too much. And I can't remember the deal. It's funny, he trades so much. I remember it being one of my big losers of the year, probably. I'd have to go back and look at it, but I can't remember the details. I think I was like selling it. It was up a couple bucks, and I was like, this isn't worth a couple bucks. And then went a couple more bucks, and I'm like, I'm in trouble here. And I actually got like some of the position covered, not bad. And then I just had a smaller, like a half size position on. And I was like, well, it's going to come back in, and here, that's when you're in the hope trade, you're in the hopeless trade. And it just kept running on me and I got crushed in it. So it happens, man. You're going to get run over, especially if you're trading earnings events or news events. Those things move. So, sometimes you're going to have big winners. Sometimes you're going to have big losers too. You just got to do your best to minimize the losers as good as you can.
All right, Spencer, 8:35. What do we got for a guest?
Andrew Zatlin. He's the editor of Moneyball Economics, has a pretty different way of looking at underlying fundamentals and what actually moves the market. So we'll be right back with Andrew Zatlin of Moneyball Economics. Welcome back, everyone, to Pre-Market Prep. We're on the line now with Andrew Zatlin. Moneyball Economics is his firm. Andrew, how's it going today?
It is great. It's Monday. Let's get trading. Let's make some money.
All right, let's do that. It's earnings season. Just about we're just at the outset of it right now. You have a pretty unique angle with regards to earnings season and its ties to fundamental underlying data and what data is tethered to what results. So can you sort of outline that like underlying thesis for us?
Absolutely. So let me sort of level set here. I'm coming out of the corporate world, and I'm not a guy who graduated Wharton and went straight to Goldman. I actually have worked in companies. I've worked in Main Street, and I therefore have a sense and direct familiarity with how companies are looking at their business and then the actions they're taking in advance of. So in essence, I'm a deer hunter, and I can tell you where the deer are by looking at the tracks. And that's what I've been doing for a few years. And with that in mind, one of the things that I really, really, really focus on is how companies are spending their money. And I've been able to get some real-time visibility to that spending, because in the way the world works today, by the time a company releases their earnings, they're already pretty much into the next quarter. So they've got pretty good line of sight, not just to what just happened in the rearview mirror, but what's coming down the pipeline in the next one. And so you really want to pay attention to two things. You want to pay attention to a lot of their hiring. What are they really doing? Are they putting their money where their mouth is or not? And the other thing you want to do is you want to focus on revenues. And a lot of people focus on earnings. Well, earnings you can manipulate all day long. You can't manipulate revenues. And there's some wonderful white papers out there that talk about just how much the market is slow to the party when it looks at revenues. It takes about 30 days for the algorithms to digest revenues, but they'll digest the earnings number immediately. There was a thing that was released last week by Hussman Institute, which talks about pretty much this. It says, ignore everything but revenues. You really want to focus on revenues because that's really what's going to tell you how the business is doing. So as we come into this quarter, I've been really heads down focused on sort of two things. What's going on with hiring? What does that imply at the company or sector specific level? But then what's the context as we come into this quarter? And I got to tell you, one of the things that interests me is I think all the good news is priced in. We've had this massive run up into earnings season. And I think everybody pretty much knows it's going to be a pretty good earnings season. I think there aren't going to be a lot of surprises. There might be a couple of curveballs out there, like for insurance companies. Hurricanes certainly weren't their friends this time around, and certainly the fires out here in Northern California aren't. But overall, I think everyone has a sense that there's no awkward surprise out there, and it feels like all the good news is priced in. And so, in fact, you might get a lot of sell the news type of things where, they beat it, but so what? We knew they were going to beat it. Facebook thinks you beat your number. Who cares? You're down 5%. And I think we started to see that last week where, off the top of my head, I think it was Domino's Pizza came out, again, beat revenues, beat earnings, down 5%. I think that's kind of a bellwether for what's going to happen this quarter, in my humble estimation.
It was and Dennis Dick here. It was every stock. I completely agree with you. Costco was actually from kind of the last quarter, but they were the first ones that had actually okay numbers, and they actually murdered the stock on it. And Domino's Pizza did it. Citigroup had pretty decent numbers. They hit that stock on it. JP Morgan had pretty decent numbers. They hit that stock on it. So far, you're right on the ball here because they've been hitting these stocks on the earnings, and we're getting to the heart of it. I mean, we're going to get Netflix here. This is one, what are your thoughts on this one? Because they're going to report here tonight. Netflix has run up 20 points here in the last week and a half. So they've run up into the report.
Yeah, I mean, in Netflix, we've got two things to take into consideration with Netflix. One is, they're like Amazon. If they want to make a profit, they can do that immediately. Oh, we're just going to raise by $1 or $2, and everyone's going to sort of sit there and say, okay, that's fine. Same with Amazon. If profit was really an issue for Amazon, they would easily get there, and that's not their focus. But they did raise prices, and so Netflix has that. Netflix has been getting bounced around a little bit because of their growth strategy in terms of getting into other regions, but their growth strategy in terms of offering and making the offer sticky. Here's some more movies and stuff. That brings me to the second one. And I know it's a little tricky to talk about, but we saw how Amazon got slapped around because of the association with Harvey Weinstein. I don't know where Netflix is, but again, that's a dollars and cents thing. If they've put money down and they've produced a show or a movie, they're probably not going to get the return if there's that Weinstein connection. That's what happened to Amazon, for example, over the weekend. One of their top executives, again, the sexual harassment stuff came to the surface. So, and that's real. Shows were canceled. $100 million gone of investment. Netflix, I think, is a little cleaner in terms of their business. Have we had that run up? One of the things that I'm looking at, if I could take it away from the Netflix specific, start high level and come back to Netflix, overall, there's this wonderful metric that I look at, and it's a simple one, and anybody out there who's listening can do this. The fundamental economy is easily looked at. If you look at a weekly number that comes out, it's jobless claims. I love jobless claims. I'm going to get on the soapbox for a second. This is someone who actually had to walk in and say, I don't have a job. It's not an estimate. It's not modeled. It's someone came in. It's comprehensive around the country. There's noise and there's cheating, but that noise and cheating is pretty consistent, so it goes away. What's fascinating is you take that metric, and that's really, in the real world, our business is firing more or less. Well, you take that and you want to compare it to the prior year. Hey, I don't care if they're firing more or less compared to a month ago, because there's seasonality. It's the rainy season. Of course, construction workers are going to get laid off. So you look at it on a year-over-year basis. Are they hiring or firing more relative to last year? All right, so that's our year-over-year metric. If you take that and you compare it to the S&P 500, what you find is massive correlation. In other words, the market and the jobless claims are looking at the same underlying thing. What is business activity? What is my potential going today, and how does that reflect on tomorrow? Now, what's interesting is, like I said, it's hugely correlated, and there are from time to time divergences. And I use that because the divergences are just a clean way of showing when it's oversold, when the market's oversold or overbought. There's one trick to this, year over year, but if you want to look at it, you kind of got to flip it. You got to invert that year over year thing, only because, let's face it, when jobless claims are going up, that's bad news. When the S&P is going up, that's good news. So you got to flip that one or the other so that you get a good sense. I like to flip it so that when jobless claims are going up, I invert that so it looks like bad news. Anyway, when you map those, what you find out is right now the market is about 5 to 7% overbought relative to the underlying fundamentals of, are companies hiring or firing more? Is there more gas in the tank? Are they gearing up? And the answer is no. The answer is absolutely not. This economy right now, not in the future if we get some kind of Trumpflation again, some kind of tax cut, but right now, businesses are hiring almost at the same pace as they were last year. And this is before the hurricane stuff hit. And that's important. Let me say that again if I can, Des. Businesses today are starting to get to this kind of plateau. And this is a dangerous term. Is it peak? Is it flatlining? No, it's plateaued. We are strong as an economy. We can talk about why the economy is, running at the level it's running. But bottom line, businesses are firing the same number of people now as they were last year. Again, hurricanes off to the side. And what that means is this economy is no longer really growing that much. 1%, big deal, something like that. And so when you come to the S&P, which is growing at 15% year to date, it's hugely out of whack. And this is historical. This goes back 30, 40 years. Every cycle, every single burp, fart, and giggle in the market can be looked at through the prism of jobless claims. And so right now, historically speaking, what we would see is one of two things. Either companies suddenly and mysteriously start hiring like you wouldn't believe. And remember, we're pretty tight already at employment levels, or the market comes back. And so that feeds back into the whole, is the market overbought? As we go into earnings season, it feels like it. I wouldn't be surprised to see a 5-7% move. And let's face it, most people came into this year, most portfolio managers thinking, if I can squeeze out 10%, I'm in a good place. Well, they've squeezed out even more than that. They're coming up now in just a few weeks, to the end of when they're going to get measured. So just for the edification of everyone listening, portfolio managers get their bonuses based on the performance. I think it's through October, November timeframe. So they want to lock it in. They don't want to do any trading that's going to undermine them. If they've gotten 15%, that's far above the expectation that they had coming in. So I think you're actually going to see some profit taking, take everything off the table. So you have that context as well. A little nervousness. Let's just lock it in and be done with it. And then we've got November. We've got mutual funds coming in and rebalancing. So a lot of things are coming to the surface that sort of say, look, it's been a great year. Let's just call it for now.
Andrew, you make a great point here, and I just want to touch on Tesla here, firing hundreds of workers after company-wide performance review. Now, I must say, or it is saying the company will replace most workers here, but comment on the firings at Tesla and how it fits with your thesis and your thoughts on Tesla moving forward.
Yeah, Tesla. Wow, what a company, huh? So we got to take a step back and recognize Tesla's no longer just Tesla. It's Tesla and Solar City. So they now have 33,000 people under the Tesla brand. And I think the news was basically Tesla came out and said, hey, we do our annual performance reviews. On the basis of that, we fired a few hundred people. So 33,000 people, and you fire a few hundred. What is that? 1% of your workforce. It's less staggering than you can imagine. I mean, it's a big number. It's all at once. The timing is kind of curious. Again, coming out of the corporate world, this was pretty standard, where you have your annual reviews and you've already put people on performance improvement type of, if you mess up again, you're out the door. So I don't know, without knowing more about exactly where they were in the company, like I said, it's 33,000 people, Solar City and Tesla. They had a merger. There's a lot of rationalization of the workforce when something like that happens. So I can go down a laundry list and say, well, it may or may not be something. It would be curious to say, hey, were those Solar City people? I mean, are these back office, financial, HR, marketing, IT types, in which case you would have a lot of redundancy when you take two massive companies and slap them together? Or was this really specific to a group? One thing I noticed about Tesla is they said, look, normally when you fire 50 or more people, you have to raise your hand and alert the various labor groups at the state and federal level. We didn't do that. We fired all these people because it was a performance thing, not a group organizational thing. Tesla's obviously under the microscope all the time. So if they say that, let me take that at face value and say, okay, this was literally take it at face value. This was part of their performance review annual. And in companies today, this is the natural outcome of those annual reviews. Here's your walking papers. And a lot of companies like a GE or whomever, are actually used to firing 2 or 3% of their workforce every year. So, that would be 2% of 33,000 would be closer to 600 people. I forget the exact number that they let go. Was it 400 or 700 or something? Anyway,
it was between 4. I don't know the exact number. It was between 4 and 7.
So it's not out of the ordinary by definition, but it's kind of one of those things. Well, what did they do last year? Let's find out about that. And because again, if this is just suddenly out of the blue, they're firing a lot of people. Well, are they 33,000 people, 700 people? It's not like it's going to move the EPS dial hugely. It would, but that's still a little bit of noise. I don't think it's necessarily a crack in the dam, so to speak, for Tesla. I'm out here in Silicon Valley, and that's part of the curious thing is I got to tell you, there are so many Teslas on the road. California is just booming with these cars. I don't personally, I don't drive a Tesla, but a friend of mine showed up last week with one. He just bought it. Why not?
Andrew, got one more question for you here, and I don't think I've ever asked you. You're a research fellow at Kyoto University Economic Research Institute, and I just wanted to ask you what made you go over to Japan for your studies, and what did you learn from being over that culture that's helped you develop your theories for the markets?
Oh, thank you so much for asking it. I can't believe it. You're the only person who's ever actually read my resume and looked at that. Yeah. So back in my college days, this was back in the 80s to date me. Japan was this amazing thing. They came out of nowhere. They had no resources, and yet they were the creditor nation to the world. And I thought, this is crazy. I want to know more about a country that can just step onto the world stage and be there. So I went there as an exchange student for a while and really fascinated by the culture, the people. They were very welcoming. I had a blast. And I was still fascinated. So when I graduated, I had a degree. I thought I was going to be a full-on economist. I was going that path. So I had a degree in economics, actually what they call economic history. And the idea there is historical events are really dictated by the underlying economies. Like the Roman Empire was after Britain, not because they wanted Britain, but they wanted the silver mines. They wanted the stuff. So with me, I went to Japan, and I was actually working for the Japanese international. Translating it literally, their foreign ministry. And I was posted to a place for 2 years in the southern part of Japan, still fascinated by what was going on. And I started to see this move away from the traditional view of Japan into, I guess today, more the consumer society. Long story short, I ended up at Kyoto University, which is, I guess, either they're Yale or Harvard, Tokyo University, Kyoto University, the two oldest institutions there, academic institutions. And they had an economic research institute, and I was able to get in as a research fellow, and I studied basically the emerging consumer trends. And now we're up to 1989. So this is right when you would have these ridiculous stories about someone paying $1,000 for a bottle of Jack Daniels, whereas you could just fly somewhere and get it for $100. There was this conspicuous consumption, a lot of money on the table, but at the same time, it's kind of like what we're seeing today with China. China's really using the playbook that Japan was using, a mercantilist playbook, and it was really fascinating how you could see the clock ticking in Japan, how ultimately you had Reagan out there knocking on the door saying, you can't continue to abuse the trade system anymore. It can't be one-sided. You can't continue to devalue the yen. And, you have to let your people start, behaving in certain ways. And that really was actually the demise of Japan, because once they were called on all the various things that they were doing that were benefiting their economy, intellectual property theft and so on, they'd caught up, but they couldn't advance very far once they were called out on that. And that's kind of what's happening with China, actually, just sort of to connect the dots. China really is abusive of the world trade system, intellectual property theft, rampant, closed to buying anything outside of the country. A lot of subsidization of homegrown companies. Not just go down that list. Once America steps up and starts pushing back, you will see China end their catch-up economy and have to shift gears into driving the global economy. And that's what's going to be interesting to see if they have that wherewithal.
Andrew Zatlin.
So that's my background, baby. I had a radio show myself.
What was that called?
Kimamara Doyobi, Andy to Michio. Excitable Saturday with Andy and Michio.
Okay.
It was awesome.
I would dig through the Wayback Machine and try to find it if it's online. Andrew Zatlin, editor of Moneyball Economics. Thank you so much for joining us today. Great insights. Great talk.
Thanks, guys. You take care.
All right.
S&P futures up $1.50, 54.25, just about mid-range on the session. We're keeping an eye on that pre-market high, 56.50. That's a buck above Friday's high. Dennis, you were right, Dennis. I would never doubt Dennis when it comes to Schwab.
I was gonna say I was wrong. Dennis was right.
Schwab reported.
I was wrong. 42 cents versus 41 cents. They beat by a penny on the EPS. 2.17 versus $2.18 billion on the sales, so a slight miss there. So an average okay report.
I'm missing on the revenues, though. And if we listen to the last guest, the revenues are more important. So, that's a consideration there. And it was good points made there as well. And, looking at the revenues miss here. So Schwab trading down a little bit in the pre-market. Also, the run-ups that we've had. And Schwab has been, one that's run up into the earnings too. Has sold off the last couple of days, probably because they've been hitting the other financials. So, people are getting a little bit nervous to book. But I mean, the stock was $38 a month ago, and now we're at 44. So there's still some room here for the stock to move. It's trading 44.32 in pre-market. Only 1,900 shares have traded, so we still got to kind of figure out where it wants to go here. Best bid's way down to 43.60, but I assume you're going to see a little bit of volatility here in Schwab today.
Yeah, pair of lows just above 44, so we haven't quite reached that yet. So looking for support at 44, and then Dennis mentioned the October 2nd low of 43.56. Actually have a pair of lows there, so. Take a couple support levels you're opening to here in Schwab. And, man, I thought did they steal this from Schwinn? Is that still traded, SCHW? You guys know what Schwinn is, right?
Nope.
Oh, come on. Someone on the desk. Schwinn? Yeah.
You are dating yourself again,
no,
buddy.
young Luke comes out with the bicycles, Schwinn bicycles.
Schwinn bicycles.
Oh, you should know by now. I did not go outside.
You guys
as a
have
child.
bikes?
I did not go outside as a child.
Do you used to come inside?
Spencer,
I did not go outside. I did not go outside much.
We just stay on the internet. We don't need to go outside. That's why we're selling our shoes, Joel. Now you're talking about bicycles. Are bicycles going to even be needed in the future? Nobody goes outside. Schwinn bikes. Oh, Texas Linda's got your back. Oh, the chat's got your back, Joel. They're defending you here. I don't remember Schwinn bicycles.
Yeah, look at that 10-speed Schwann. Yeah, I used to.
Wave Traders got your back. Texas Linda's got your back. You're okay, Joe.
I had a Stingray. With a banana seat.
I don't even know what kind of bicycle I had. I had a BM. You know what? I do know. When I was like 10 years old, I wanted a BMX. One of the BMX bikes, and I got one of those. I remember, but it's been a while. I need to start doing something, some biking or some running or something, because I'm kind of just routing here. But that's another story here. Let's move back into the market.
Well, one quick other thing. The hardest thing you're ever going to do is teach your kid how to ride a bike. I'm telling you that. Right?
I got to do that. I'm right at that stage right now. Spencer's 3. We got the training wheels on. We got him on that thing. So he can pedal a little bit there. But, once you take those training wheels off, probably really hard, eh?
You got to run and you got to hold on, and then you actually have to let them wipe out. Because that's the only way they're going to learn to get their balance. But my buddy Craig, what he used to do is he just used to push them in the grass, like off the side of the porch. So the first few times that they fell down, it was always in the grass. So that's something that you can keep in mind. But we have 3 minutes left here, and we were covering some ratings. Any other ratings or imbalances that
Spencer, was there any other ratings that you noticed? Ford, we talked, down a great RBC. There was a bunch. Is there anything else you want to highlight?
You got a lot of them. I think you got all the ones I was going to hit on. Just to recap, we talked Citi. We talked did we talk PSX? We did talk PSX. We talked BMY. I was going to mention Ford, but you brought them up eventually. Decker got a downgrade. Decker's Outdoor downgraded Susquehanna to negative there. We had CSX, believed you talked to them. JB Hunt, they had earnings last week. Adobe, we hit on. Imperva, IMPV downgraded Piper Jaffray to neutral. Those are really it as far as downgrades go, and then upgrades. Just Apple was the big one. Bluebird you discussed. We have Groupon as well. KKR upgraded at Goldman Sachs, and as far as initiations go, nothing really jumping out to me. So a lot of them, but we covered pretty much all of them.
And balances have grown. Alibaba is now 176,000 to buy. That's significant. Square is now 83,000 to buy. Snap is 52,000 to buy. Citi is 98,000 to sell. Interesting. Your oil stocks are all trading up, and I think you're going to see this stuff because oil is trading higher here. Right now, I'm seeing actually ExxonMobil and Chevron and ConocoPhillips all have selling balances. I don't think that lasts though, because these stocks, obviously, with oil trading up as much as it is, are probably going to catch a bid. And what you see is you're seeing the early institution that's showing his hand, but the other institutions lick their chops when they see this. They're like, oh, oil's up here. I'm going to buy those 42,000 shares that are for sale in ExxonMobil. They'll come in at the last minute and flip that imbalance. So just because you see an imbalance at 855 doesn't mean it's going to stay that way. Because a lot of institutions come in at the last minute. But when you're seeing something like strong like Alibaba and it's up $1.50, you'd be fairly confident that imbalance actually might grow. Where something like an ExxonMobil, Chevron is showing 31,000 to sell, that one's going to flip. Unless oil comes back down, there's very little chance that Chevron's going to open down on the day, just because you have so many traders that are going to arbitrage that out.
All right, just one stock I just want to mention that we've been talking about, and since we mentioned that Ford downgrade, Dennis, this GM will not give in here.
It's a monster.
Look at this thing. It had the one downgrade, and then it bounced back, hit a new all-time high on Friday at 46.11, 45.88 close, trading down 8 cents in the pre-market. Let's see what happens here. Basically, it took a little pause at 44, not much of a pause at 45. We'll see if sellers reemerge here at 46.11, the all-time high in GM. So
Spencer, you were just mentioning Estee Lauder to me. EL, is there news on that? Because I do see EL now trading up 1.5% in the pre-market. Was there a rating change on that one?
No, the news is that it's at a 52-week high this morning. I don't know what the news is. The news is that it's running. I have no idea.
Yeah, because this is a breakout for EL. It looks like it's bid 112.45 too, so nobody's hitting that bid. It does look like there's probably some news on that. Maybe there's a late analyst move or something. I'll go take a quick look here right now too. But
wow.
Here's a retailer, Joel. There's not a lot of retailers that have a chart that look like this. This is an all-time high. What's up?
I'm not sure. And did you see Ulta last week too? I know Ulta sells a lot of different products, but that stock got whacked on a downgrade here. 187.96. But we'll hunt for the news on that. Spencer, what do you got for us for Tuesday?
Nick Shaheen is our only guest on the docket tomorrow. As of yet, we are talking about potentially having a special show on Thursday. We've talked about it this morning on the about the anniversary of the Crash 87. So maybe look forward to that, but we'll let you know as we get closer to that day. As far as today's show, though, you can catch it again on our podcast, which is on iTunes, SoundCloud, and Stitcher, or by going to youtube.com/BenzingaTV is where all of the shows air live every day. So don't forget to do that. You can also like us on Facebook at PreMarket Prep. Follow Joel and Dennis on Twitter at Spoos is Joel and at Triple D Trader is Dennis. So that's it for us today. Have a good rest of your Monday, everybody. Hope you all had a nice, relaxing weekend and you're having a good day so far. We'll be back with you on Tuesday.